Welcome to another Founder Wisdom podcast. We have Alex Harmsen with us today for round two. Alex been on, I think, a year or two ago. It was great. So thought I would re-invite him on. He's CEO and founder at Global Predictions Inc. Also portfoliopilot.com. It's your personal AI advisor. It's Alex has been a strategic advisor at a bunch of company. He was also founder chairman at Iris Automation, a bunch of other cool companies. So let's jump right in. Podpire is presenting that episode. If you want to start your pod, you can go to podpire.com. We have a free ebook and a masterclass for you there. Alex, welcome to the pod. Tell us a bit more about yourself.
I'm happy to be back, and it feels like in the last year or two, so much has changed.
Yes. What has changed in your life and in Global Predictions, for example?
Yeah, if I think back, we're a 3-year-old company, right? And so year one of the company versus year three of the company, like night and day difference. I feel like everything has sort of fallen into place. We started off with Global Predictions, building forecasting models and really focused on sort of economic predictions and tying together everything in the economy and trying to connect it to people's personal portfolios and trying to figure out if we would sell to wealth managers and financial advisors or go straight to consumer. And now our main focus is Portfolio Pilot, which is our B2C offering, direct to consumer AI financial advisor. We already have about 30,000 users, $30 billion of assets on the platform, and it's growing like crazy. And we had to actually become a registered investment advisor with the SEC so we can actually give and charge for financial advice. It feels like the messaging is so much clearer right now, right? Like, I don't think people are quite ready for AI to manage their money for them, but the idea that you can have AI go in and help optimize your portfolio or find different optimization opportunities across real estate or taxes or fees or rebalancing or thinking about diversification or estate planning or trusts or insurance. There's so many different ways that you could optimize your life and get good financial advice. And so it sort of feels like we've needed to build all these other little modules and pieces to be able to give comprehensive financial advice to someone to actually be able to replace human financial advisors. And so instead of selling to human financial advisors, we decided to just compete head on. It's a $240 billion market. And I honestly don't understand how they're going to stick around for that much longer. Feels like antiquated advice. It feels like lots of conflicts of interest, human bias. A lot of the stuff is just, sort of cookie cutter, lowest common denominator advice. And in the age of AI, the idea that you could get truly personalized advice, expert opinions, and we see it a lot in the news with, legal and medical, but, why not a second opinion from your AI financial advisor, at a minimum, if not, have it truly be a guide for your finances to feel more confident.
Right. So someone not using AI is at a slight disadvantage nowadays. How much people are AI powered and how much are not AI powered when it comes to managing their portfolio?
I think night and day difference, right? I think it's the difference between working side by side with an expert versus just trying to do everything yourself. Why would you not? It's similar to sending out an email or writing a document or if we're interviewing new people and they're not using AI to complete the challenge, we don't hire them. At this point, we're a 10-person team now with Portfolio Pilot. I think we're operating at an equivalent output level to a 25-person team with my previous company, Iris Automation. It's not that we've hired smarter or more capable people or that they're working longer hours. Truly, there's a leverage that they're getting from AI tools. Whether it's coding, programming, or even product design or marketing, it is absolutely wild. And then there's less overhead. And every single time we build something or add a process, it just accelerates everything.
Right. And then your competition, is it like the Wealth Simple of this world?
Not really, right? You have robo advisors like Wealthsimple or Wealthfront or Betterment, and even Fidelity and Schwab and Vanguard have their own robo advisors. I originally thought those would be competitors, but they're not really. The main problem with these robo advisors is that it's basically just some ETF exposure to equities and bonds. It's very easy to use and create an account, which is nice, but it's only a small part of your whole net worth. People put 5%, 10% of their net worth in there. What you really want is advice across all your retirement accounts and your credit cards and cash and emergency fund and crypto, and whether you have real estate or not, should affect all your investing decisions, long-term planning, estate planning, taxes. There's so much that a human financial advisor might be able to do for you. And so we're really more competing with the human financial advisors that have sort of this comprehensive solution for you that act as a guide. And so the idea is personalized financial advice for the DIY investor that's already not going with a human financial advisor. They want to do it themselves. And, this is a step up. We tell people you don't have to act on all of our advice. We don't manage the money for you either, right? You plug in your existing accounts and then we'll give you advice on top of that. And then you can act on all of the advice or, throw away 80% of the advice, kind of like using Netflix or TikTok or any other system that has a recommender engine built in. Every time you act on something, we give you more of that. And we say like, okay, add this to your preferences dynamically. If you ignore advice, we say, okay, clearly Charles doesn't like to be recommended all these bonds. Let's start recommending other stuff. And then there's an auditing system there as part of our compliance program to make sure that the advice we're giving, is conflict free or, as conflict free or as unbiased as we can get. And then systematically, the system gets better and better and better. Right? We're not starting from scratch with every new client we engage in. Sorry, I actually lost you. I can't hear you.
Yeah, that's because I'm on mute. Thanks for that.
Okay.
You often talk about the agentic age on your LinkedIn. You've tried the ChatGPT operator not so long ago. How long till we can actually deploy an AI agent, financial advisor that will make decision for us?
So I listened to a really cool YouTube video recently of some of the Anthropic founders, and they were talking a lot about what is an agent versus just like an AI powered workflow. And I think a big part of it is that the agent will proactively do stuff for you. And so I think when I talk to people about we're an expert or we've built this AI financial advisor, I think a lot of people assume that we have built another version of ChatGPT with a box and you just ask it questions about your portfolio, right? It's relatively easy. Well, in Q1 of 2025, it's relatively easy to build an AI assistant that you can ask questions to, interrogate stuff. The main question, I think, or the main problem for most people, they don't know what to ask. And so what you really want, and what we've built with Portfolio Pilot, is agentic, at least with this definition, and that is proactive, in the sense that the system is proactively looking at what's happening in the economy. It's looking at your portfolio. It's looking at all your preferences. It understands your short, medium, long-term goals. And then it will say, send you an email and say, Charles, here's this tax loss harvesting opportunity for you. The markets are down. And you should sell this lot and you should buy this other thing instead. Here's how much you could save. The opportunity is only available for a certain period of time. Or I saw that you got this paycheck, but you haven't invested it yet, right? There's idle cash just sitting on the sidelines, ready to be invested. Or, it's about time that you have kids. And so you should think about guardianship for your kids and renew that, every year or two. There's a 401k rollover account that you should. And so this idea of being proactive and explicitly going to users and telling them, hey, here's this thing we noticed that you could do. That's the differentiator. I think that's I think that's the crossover to like agentic AI. And I mean, I think we're here. I don't think this is like a thing that will happen in 2025, 2026. It's just like how many people can try it. And like, I like to think the device will just get better and better and better.
Yes, singularity is here quite literally, and we can't stop it. It's exciting for most, but for not for all of us, right? For you and I, it'll be quite the ride. It'll be pretty fun. But what do you think of others and the lower strata of society that don't have even a penny to invest? Do you think this revolution will advantage them? And do you feel this will end with UBI?
I mean, UBI is interesting, right? There's a whole bunch of experiments recently that haven't really paid off, and I think there's something about like they haven't really worked out the way people expect. I think there's something about purpose in life that ends up being very important, and we need to figure that out. I don't know. I like to think that advancements like this, another way you can frame Portfolio Pilot is taking the kind of expert advice that's only available to the top hedge funds and family offices and making that available to everybody. Right? We're charging $20 a month for this product. It's extremely accessible. And there's a free tier as well. And there's a 2-week free trial even before you start paying. And so I don't think there's any excuse to not get a second opinion on your portfolio. I think it's much more like the sort of existing predatory lending and insurance salesmen and conflicting advice and being charged 1% or 1.5% or being put in mutual funds that are not the best, but they charge high fees. That's the problem, right? I think I see this as removing inefficiency in the system. And, similar with coding tools, I think, like these AI-powered coding tools, it makes a lot of people that aren't expert coders, right? Junior engineers suddenly have, feedback on their work, before they submit a pull request or add something. Junior marketer can get a double check on their work before they present it or push it. And I think it has this like democratizing effect to everybody. I think the big question between like who will be part of the the lower class or not will be the people that use AI and the people that don't use AI.
Right. And it's a Darwinian world, right? I think capitalism can still scale for a little while until AGI hits. It'll get a bit wild here, but you can think of the future as you having a model that takes good decisions for you and that would fetch your model, right? To invest a bit of money. It would fetch this health model so that you can fully optimize your health. But you would have to pay a lot for that best model to be there. That is until we continue with the capitalism model that is. But yeah, $20 is very accessible. Can you give us a use case? Say that I invest 100K on the platform. Like, what returns have you seen?
Yeah, the thing is, we're not managing the money for people, right? And so
Just
people
giving
connect.
advice.
We're truly advising. And so at the end of the day, like we talk about doing 95% of the work for you. We'll surface opportunities and advice and risks. And then you decide, like, do I press the big red button or not? Do I execute a trade? Do I move money? Do I invest something? Honestly, a lot of the most useful advice, I think, from my perspective, is like there's cash sitting in this account that you haven't touched for a long time. At a minimum, put it into a money market fund. It's treasury bills. It's relatively, risk-free. At least you'll be able to get 4%, 4.5%. You're missing out on thousands of dollars just having it sit in this account. There's a tax loss harvesting opportunity, right? Like people only think about tax loss harvesting at the end of the year. But if you do it throughout the year, there's so much like natural market volatility that you can take advantage of. The idea that like you have 8 different accounts across your IRA and 401k and your spouse's 401k and your crypto account and your cash and checking and emergency funds and a 529 and your house and stock options of the company. Like for some people using Portfolio Pilot, this is the first time they've ever got some true assessment of diversity across their entire portfolio. Run a crisis simulation. It's kind of scary to see your portfolio drop by 40%, but better to run it virtually now than actually experience going through something like that. Maybe you're not taking the right risk that you're actually comfortable with. Even for the same level of risk, depending on how close you are to the theoretical efficient frontier, how you think about the correlations within your portfolio, how everything sort of adds up and fits together, can make a huge difference. And without taking more risk, you might be able to increase your overall expected returns in your portfolio.
Right. And is that the future, just like handing your money to an AI, not looking at it until it's like ready, until the pie is fully baked, other than like feeling all these anxieties from the ups and downs? I don't think humans are made for that, right?
I think it's kind of like self-driving cars, right?
Okay.
Where I think there will be people that fight it to the bitter end and want to keep their car, want to keep driving themselves. I also think that long term, 100 years from now, there will be racetracks and people having fun and hobby, driving cars for a hobby and for sports. I have no problems with that at all, right? I think it's very similar to people day trading and people, just investing in sort of a side account or Robinhood account or Webull account, and just they're in social groups and it's like a big part of their social life or hobbies. But I don't know, should like retail investors do that with their 401ks, with their retirement accounts, with the bulk of their money in their Fidelity accounts? Probably not. Portfolio management is a much better way to do that. If you can have sort of this integrated AI guide into everything that you're doing, I think it's only natural that 5 years from now, 10 years from now, everybody is going to have some integrated AI financial advisor and call out stuff for you. And a lot of it, like probably 90% of it, will be proactive, reaching out to you, Charles. Hey, here's this thing you should pay attention to. And 10% of it will be like, hey, I'm worried about this. Should I be worried about this? What happens if I do X? Am I still on track for retirement? And I think you'll be able to interact with it in whatever shape or form it takes. But the idea that you won't have this like integrated AI doctor, AI lawyer, AI financial advisor into your life that sort of like just follows you along, sort of the side companion that is both reactive and proactive, feels inevitable to me.
Right. What's your take on the recent bullishness of the US government on crypto, and what do you think of Doge as reimagining the future banking system as it is today?
I think for Doge, I think like theoretically it's wonderful, this idea of like trimming waste and cutting like excess funding and helping to balance the budget. And like, I don't think we should spend more than we bring in, right? At the end of the day, like, we're going to pay for it no matter what. It's either inflation and monetizing debt or it's taxes. And so in that sense, we're paying a tremendous amount, in government debt servicing. Where exactly the waste is, I have no idea. I think it's reasonable to do zero-based budgeting and truly think about what's necessary, what's not necessary. The idea of like cutting the VA and important social programs, probably not a good idea. I think it's like, it's a little bit scary to just like slash and burn. There's like probably also just like individual incentives wrapped up into everything that's happening here with Doge. And so like, we'll see where it actually ends up. Sometimes you have to shake it up, but like it's kind of scary to, it's reasonable to do that with like one or two companies at a time, I think, but doing it with the US government, there's a stability and a cornerstone to these institutions that's actually really, really important for the economy. not just in the US, but worldwide, right? I talk to friends in Canada that are really worried about instability, like in markets overall, and tariffs on, tariffs off. It stops people from taking risks, and it stops money from flowing, and people hoard, it hoards the cash flows, liquidity in markets. And it's very difficult for long-term investing, which is, I think, is like a huge part of why the US is successful worldwide. So I don't know. It's a mixed bag.
What about crypto?
Crypto. I mean, I think it's a little bit wild for the US government to embrace crypto to this level. I think the long-term play for crypto is to rival the US dollar as a reserve currency. And having a reserve currency is one of the most important and powerful things that you could have as an economy. It defines empires throughout history. And I honestly don't have no idea how this is going to shake out. It's probably a good thing for regulators to be more clear about how crypto should be regulated. So I'm happy about that in general. I think that it would be great to see more use cases. It's really interesting to see Stripe adopting a lot of these stable coins and using that as a backbone for trade and money movement. And I think the less restrictions you have in the banking system, the better. And it's just facilitates money. If it's money, it stops these things just being constrained to sort of some expert class or top class of people that have access to great rates. And so the more you can have democratization of that, the better.
Love that. Alex, where can people find out more about you?
Honestly, I would love for people to sign up for Portfolio Pilot, portfoliopilot.com, and get a second opinion, and it's free to connect some accounts, or even just take a screenshot of an account, and you'll get a full AI assessment without any credit card required. Follow us on X. My handle's Alex Harm. The company is Portfolio Pilot, and just send us a message. We're small enough with 10 people. Even though the scale is quite large already, we respond to everybody. We are constantly looking for feedback. If anything, our success is attributed to the velocity at which we ship stuff and react to customer feedback. We do a new release every single Monday evening. Oftentimes people report something on a Thursday or Friday, and then it's out and fixed by Monday.
That was Alex Harmsen.